you can get a sense of what's coming, but it always takes way longer than you think. Like, I remember I turned negative on the housing market in about 2005, and it stayed really strong for a few more years. Everything takes longer than you think, and everything goes further than you think. I don't know, I feel like there's probably going to be deflationary pressure, which is actually good for the consumer, on energy prices. I think there's, nothing makes life easier than people seeing that the gas price is going down. And oil, West Texas Intermediate, is down there at about 70, seems to be where it settles in. And if it goes down, there's a lot of support at about 63. And it's nothing but air down to 40. And I'm starting to get convinced, not fully convinced yet, but I'm starting to get convinced that we're going to go to 40. But certainly, the vast majority of historical indicators suggest that recession is more likely than not, to my eye, in 2024.
Wall Street has bought hook, line, and sinker into the notion of a soft landing for the economy. It's reflected in the stock market and the bond market. Your thoughts?
We think this is time to be upgrading portfolios and selling some of these assets because there's liquidity now that didn't exist for much of 2023. I think the markets are in a euphoria type of a period right now. And I worry about that. Yes, well, the yield curve has been inverted now for about 80 weeks, maybe a little more than 80 weeks. The only episode that had a longer period of an inverted yield curve before the recession came was in the late 70s, early 80s, which interestingly was also the last time we had an inflation fight. And the fact that recession hasn't come after 80 plus weeks of yield curve inversion is a very bad logic to say it's not coming. The thing that I'm most concerned about now economically is reports coming from the states. We look at national unemployment data, but the states release unemployment data too. 88% of them are reporting rising unemployment over the last 6 months. If 88% of the states are reporting rising unemployment, how can it be that national unemployment remains stable at a very, very low level? I'm skeptical about this data, and it bothers me that the leader, the Magnificent Seven, has really stopped being a leader in the upside. It's participating, but it peaked out on a relative strength basis back in July. And so I'm suspicious of the valuations, and I'm suspicious of the exuberance in the market. So I want to have cash at this point, which I want to deploy, which I might want to deploy in the aftermath of the recession that is going to come. I think, investors should be looking long-term and looking to hold cash and buy emerging markets, which are doing very badly and will continue to do badly as we enter recession. So stay away for now, but buy them once they're substantially cheaper.